A very key level, and we haven't seen that level for about 5 years or so. If we have a look at the week chart for you can just see how much value has fallen off the FTSE 100. 20% has disappeared in this last week or so. Remember that some people say 20%, 25% constituents for a stock market crash, but down there very much at the trade today, you can see how much it's fallen off on this morning's trade. And if we look back to the start of September, get a month chart for you, you can see how the downward curve has been in place for the past 5 or 6 weeks though. We were up about 5,500 here at the beginning of September, we're now trading to 4,000, so a real heavy sell-off of the last 5 weeks. The story again all about the big banking stocks. HBOS had 2 days of recovery, it's now down more than 20% today. Barclays, which also confirmed this morning it's looking at a range of options to boost its finances, is also down about 20% in value. So too is Royal Bank of Scotland, down 15% there, and Lloyds TSB is also lower by about 10%. And the scale of the sell-off is actually across all sectors. Mining stocks, for example, are down. The likes of Xstrata and Rio Tinto having a very difficult day today, down nearly 15%. High street stores, Marks & Spencer, down 4%. Tesco there is also lower by about 6% today. Also British Airways having a dreadful day, so too is a telecom giant BT. And the fear evident right across Europe. For example, the Paris market, the CAC 40, and the German market, the DAX, are having a dreadful time. The DAX in particular is down about 9%. And one country, Austria, has taken the decision to suspend the stock exchange in Vienna after several shares plunged more than 10% this morning. Now, analysts say one of the major issues at the moment is the LIBOR rate. Now, we talk about that a lot at the moment, don't we? It's the rate at which banks lend to each other. And in the last hour, the 3-month LIBOR rate has actually gone up in value slightly. Also, the overnight rate has also jumped, but more markedly by nearly half of 1 percentage point. Now, it shows there is still little trust, if any, in the banking system, despite Alistair Darling and Gordon Brown coming out this week with that massive bank rescue plan. Also, this market turmoil had an effect on the price of oil, as you would imagine. Down on fears that a global recession will cause a big drop in demand for the commodity. We are down below $80 per barrel, a level we haven't seen, or a price we haven't seen, for over a year now. And that means the likes of Tesco have announced today that it's actually to cut the cost of petrol by 3p a litre from today. It follows a penny cut by Asda at the start of the week and price cuts by a host of retailers over the last month. So maybe this is a little kind of shining light in a very dark tunnel at the moment. Today's news is also affecting the currency markets. The pound has fallen to a 5-year low against the dollar. Not great if you're off on your holidays to the United States anytime soon. It's also down against the euro as banks continue to hoard dollar funds, are being told. Not surprisingly, gold prices have jumped to more than 4% today as investors scramble for safe havens. It's actually jumped to $925 an ounce as panicky investors are switching from cash and stock markets into gold. You can see how much the price of gold has risen by that chart there. Also today, Woolworths, which is a troubled high street retailer, has found a very unlikely ally. Sir Alan Sugar, the founder of Amstrad and of course the star of the TV show The Apprentice, has acquired a 4% stake in the company. It's worth about £2 million, but shares in Woolworths have fallen more than 80% over the past 12 months. And we're being told that owners of buy-to-let properties are among the worst hit by falls in the housing market. A new survey has revealed that 10 areas with the biggest drops, and city centre flats are dominating that list. Birmingham Canal is at the top of the list after a 17% fall in flats there. The list also includes the likes of Manchester, Leeds and London. If you're an owner of a flat, do get in touch with us. Tell us your situation at the moment if you'd like to. And if the financial crisis is affecting you, if you think it's the worst is over, maybe we've got more bad news to come, then do get involved in our website. Jeremy Thompson has given his views on what he thinks about the credit crunch. Do send on your thoughts on video via our website. You'll find that at skynews.com/creditcrunchvideos.
Fella, thanks very much indeed. Welcome back to the trading floor of CMC Markets, who've been kind enough to invite us in to see how they do business here. It's all been business in one direction, sad to say. James Hughes will explain what that means as a market analyst. A little calm before the storm here, actually, James. I'm not saying your traders have their feet up, but they're waiting for the Dow to open. They're waiting for Wall Street.
That's right, we're waiting for Wall Street now. Of course, after this morning's falls, we've seen the euphoria and the panic continue to go through. Now things are slowing down a little bit before we get to Wall Street open. We're looking